Bio-Techne Corporation, a Minneapolis-based life science tools company that supplies the proteins, antibodies, and analytical instruments researchers use to study cells, discover drugs, and develop cell and gene therapies.
Tech is a turnaround in motion. The stock fell over 50% in 5 years as biotech funding dried up. 3 sequential quarters of revenue recovery now raise the question, is the floor in?
The story begins in 1976 in Minneapolis, a spin-out from a research lab that became the go-to supplier of cytokines and growth factors for academic and pharmaceutical scientists worldwide.
Bio-Techne built its brand portfolio through acquisitions. Protein Simple for Western blot instruments, Advanced Cell Diagnostics for spatial genomics, and Novus Biologicals for antibodies. By 2021, revenue exceeded $1.3 billion.
Then the biotech funding cycle turned. Rising rates crushed early-stage biotech spending. Academic labs tightened budgets. China revenue decelerated sharply. Revenue fell toward $1.2 billion.
Protein Sciences generates roughly 66% of revenue. Cytokines, antibodies, and cell biology reagents used in drug discovery and cell therapy manufacturing. It is Bio-Techne's core identity.
Diagnostics and genomics accounts for the remaining 34%, spatial genomics assays, diagnostic controls, and molecular diagnostic products. Advanced Cell Diagnostics is the segment's highest growth platform.
Gross margins run near 67%. Solid for life science tools, though below the 80-plus margins of larger peers like Thermo Fisher. Margin compression reflects lower volumes during the biotech funding slowdown.
Operating income was $76 million last quarter, a recovery from near break-even levels in fiscal 2024. Management is targeting a return to 25% operating margins as revenue rebuilds.
Thermo Fisher Scientific and Danaher are the category giants, revenues measured in tens of billions, dominant across every life science tools segment globally.
Bio-Rad Laboratories is the closest size peer with overlapping protein analysis instruments. Repligen and Agilent compete in specific niches of bioprocessing and molecular analysis.
Bio-Techne's moat is citation-based stickiness. Researchers cite specific catalog numbers in published protocols. Switching invalidates established methods. The Protein Simple installed base adds consumable pull-through lock-in.
Bio-Techne ships to tens of thousands of academic labs, pharma companies, and biotechs across North America, Europe, and Asia-Pacific. Its reagents appear in over 30,000 peer-reviewed publications annually.
China was the fastest-growing region before the slowdown. North America and Europe are recovering. A Chinese biotech spending rebound is a key variable for the fiscal 2027 growth thesis.
Kim Kelderman has led Bio-Techne since 2023, stepping into the CEO role after heading the Protein Sciences segment, the company's largest and most profitable division.
His tenure has centered on restructuring costs, rationalizing the product portfolio, and positioning Bio-Techne to capture the next wave of biotech investment in cell and gene therapy.
Bio-Techne, a life science tools company in recovery, protein sciences and spatial genomics as the platform, GLP-1 research demand and cell therapy manufacturing as emerging tailwinds.
The Q3 fiscal 2026 results are in, and what management said about China recovery, GLP-1 pipeline spend, and margin trajectory is in the full earnings episode.
Bio-Techne reported Q3 fiscal 2026 revenue of $311.4 million, down 1.5% year-over-year, and short of the $316 million estimate. Adjusted EPS of 53 cents missed the 55-cent consensus by 2 cents. GAAP EPS came in at 33 cents. The life sciences tools sector continues navigating a biopharma funding headwind. This is Charged Alpha. I'm Hudson.
And I'm Lana. Bio-Techne is a life sciences tools company selling proteins, antibodies, immunoassays, and molecular diagnostics to biopharma researchers, academic institutions, and clinical laboratories. Their products are critical reagents used at the earliest stages of drug discovery and development. The Protein Sciences segment generates the majority of revenue through antibodies and recombinant proteins sold globally to R&D teams in biopharma and academia. Market cap is approximately $7.6 billion.
Kim Kelderman became CEO in 2023, inheriting a business that had grown rapidly through acquisition during the biotech boom of 2020 and 2021. He is managing through the post-boom normalization, a period of biopharma cost-cutting that has reduced demand for research reagents across the industry. His focus is operational efficiency, margin preservation, and positioning the company for recovery when the biopharma R&D investment cycle rebounds.
Q3 fiscal 2026 revenue of $311.4 million declined 1.5% from $316.2 million in the prior year quarter. The miss against the $316 million consensus reflects continued softness in biopharma research spending. Bio-Techne's revenue has been flat to declining year over year for several consecutive quarters as pharmaceutical companies reduced reagent purchasing budgets in response to higher capital costs and pipeline prioritization.
Gross margin of 67% was maintained despite revenue softness, a reflection of Bio-Techne's high-quality product portfolio where antibodies and proteins carry structural pricing power. Operating income of $75.5 million represents a 24% operating margin. This margin profile distinguishes Bio-Techne from lower-quality peers and provides earnings resilience even when top-line growth is absent from the biopharma research environment.
Adjusted EPS of 53 cents missed the 55-cent consensus by 2 cents. GAAP EPS of 33 cents reflects stock-based compensation and acquisition-related amortization excluded from the adjusted figure. The EPS miss is modest but notable. Estimates had already been revised downward to reflect biopharma spending pressure. Bio-Techne missed adjusted EPS in the most recent quarter after beating in the prior 2 consecutive periods.
The balance sheet is conservative. Cash of $210 million against $276 million in long-term debt leaves net debt of $66 million. Appropriate leverage for a company generating consistent operating income. Bio-Techne has historically used its balance sheet for bolt-on acquisitions in adjacent life science markets. The net debt position preserves flexibility for strategic M&A if compelling targets emerge during the current sector downturn.
Net income of $51 million represents a 16% net margin, an above-average profitability profile for a life sciences tools company. This margin reflects differentiated scientific products with genuine pricing power. Generating $50 million in quarterly net income during a demand soft patch demonstrates the underlying earnings durability of a business built on scientifically critical reagents that researchers cannot easily substitute.
Management did not provide specific numerical guidance for Q4 fiscal 2026. Commentary emphasized monitoring of biopharma customer spending patterns and confidence in Bio-Techne's long-term market position. No meaningful acceleration in demand was highlighted, but management noted academic and government research channels showed relative stability versus the more pressured biopharma segment.
Analyst reaction to Bio-Techne's Q3 was cautiously negative. The small EPS miss, 53 cents versus 55-cent consensus, compounded the revenue miss to create an all-miss quarter after the prior 2 periods showed modest beats. The life sciences tools sector has been under sustained analyst pressure to show inflection in biopharma customer spending, and Q3 provided no evidence of the anticipated recovery emerging.
The gross margin hold at 67% is the lone bright spot analysts will cite. Preserving margin in a revenue-challenged environment demonstrates product quality and pricing discipline. Bulls emphasize that gross margin stability proves Bio-Techne's competitive position is intact even if near-term volume is pressured. The margin profile provides the earnings floor necessary to survive an extended biopharma spending downturn without structural damage to the business.
The sector-wide biopharma R&D spending contraction is the central bear narrative. Large pharmaceutical companies have been rationalizing external research spending as their own R&D pipelines become more selective and cost-conscious. This manifests as reduced orders for research reagents, the core Bio-Techne product. The tools sector may experience below-trend revenue growth until biopharma companies return to aggressive early-stage discovery spending.
Pricing pressure from Chinese reagent manufacturers is an emerging structural concern. Chinese biotech companies are gaining share in the global antibody and protein market by offering comparable products at substantially lower price points. For Bio-Techne, the threat is most acute in academic markets, where budget sensitivity drives purchasing decisions. This pricing dynamic is a headwind that compounds the cyclical biopharma spending softness affecting the entire sector.
Bio-Techne at $7.6 billion implies roughly 6 times trailing 12-month revenue below historical premium levels. For a business with 67% gross margins and consistent profitability, this multiple suggests the market prices in continued near-term softness without giving credit for recovery upside. Value-oriented investors view the current level as an attractive entry point for a high-quality compounder at what they believe is a cyclical trough.
The bull case is biopharma spending cycle recovery. Large pharmaceutical companies maintain active R&D pipelines requiring research reagents at every development stage. When cost of capital normalizes and pharma re-accelerates discovery investment, demand for Bio-Techne's proteins and antibodies should recover sharply. Historical patterns suggest tools companies experience strong revenue acceleration in the first year following a biopharma investment cycle trough.
Diagnostics and genomics provide a second revenue driver independent of biopharma cycles. The diagnostics business serves clinical labs rather than R&D environments and is less sensitive to pharma spending pullbacks. Geographic expansion in clinical diagnostics, particularly in Europe and Asia-Pacific, gives Bio-Techne an organic growth lever that does not depend on biopharma R&D investment cycle recovery to generate results.
Acquisitive growth adds long-duration value. A conservative balance sheet and consistent free cash flow give Bio-Techne capacity for bolt-on acquisitions when conditions create attractive targets. Life sciences tools companies that traded at premium multiples during the biotech boom now trade at compressed valuations, creating acquisition targets that could expand Bio-Techne's product breadth and addressable market at attractive entry points.
The bear case leads with structural demand displacement from Chinese manufacturers. Chinese life sciences companies are aggressively building antibody and protein manufacturing capacity, capturing market share in academic and lower-tier research markets with substantially lower prices. If Bio-Techne loses meaningful share in non-biopharma segments, the volume base supporting the recovery thesis is permanently impaired.
Prolonged biopharma spending contraction is the cyclical bear argument. If large pharmaceutical companies extend cost-cutting into 2027, reagent demand could remain below pre-cycle levels for 3 or more consecutive years. Bio-Techne's revenue has declined for multiple consecutive year-over-year quarters. A second year of decline would challenge the trough thesis and suggest structural rather than cyclical demand impairment.
Multiple compression is the valuation bear argument. Bio-Techne historically commanded 15 to 20 times EBITDA as a high-growth tools company. If the market reprices it as a mature growth business rather than a compounding growth story, the multiple could compress significantly even if earnings hold. Repricing from growth to value multiples would be a painful outcome for investors expecting a premium recovery.
The capital cycle may be longer than bulls anticipate. Biopharma companies that overhired in 2020 and 2021 have been restructuring for 3 years. The normalization could extend as companies remain cautious about recommitting to early-stage discovery spending. Each quarter without a clear inflection in reagent orders makes the cycle recovery thesis harder to defend at current valuations.
Repligen Corporation is the closest direct peer, a pure-play life sciences tools company serving biopharma with bioprocess filtration products. Repligen experienced similar revenue headwinds as biopharma customers normalized post-COVID spending. Both are navigating the same demand cycle, making Repligen a useful benchmark for timing the tools recovery and how the market values these stocks at cycle troughs.
Bruker Corporation provides a broader comparison as a life sciences instrumentation company serving research and clinical markets. Bruker's mix across academic, government, and biopharma customers gives insight into which channels are more resilient. Bruker's experience suggests academic and government channels are holding relatively better than biopharma, consistent with Bio-Techne's channel commentary about where stability is being found.
Agilent Technologies and Mettler Toledo represent more diversified life sciences tools peers with broader end-market exposure. Their revenue stability during the biopharma contraction reflects diversification benefits that pure-play reagent companies lack. Their valuation multiples during the contraction provide a framework for the range of outcomes Bio-Techne could experience as the market reassesses its growth profile.
At $7.6 billion, Bio-Techne implies roughly 6 times trailing revenue and 25 times trailing earnings, below historical premium levels, but not yet compelling enough for deep value buyers. The multiple sits in a middle ground, not expensive given the business quality, but not a clear value without visibility on when the biopharma spending cycle turns toward recovery.
Bio-Techne options showed moderate implied volatility heading into Q3, consistent with a quality company where earnings moves are historically contained. Pre-earnings positioning reflected modest put bias from biopharma spending concerns and whether estimates could hold at already reduced levels. The post-earnings decline was contained within the implied move range the market priced before the report.
The moderate implied volatility reflects Bio-Techne's reputation as a predictable, high-margin business where quarterly results are rarely catastrophic. The biggest options risk was sudden deterioration in biopharma customer orders, priced with some probability but not at extreme levels. The outcome, small misses on revenue and EPS, was contained within the range the market anticipated, producing no significant implied volatility squeeze or collapse.
Insider activity at Bio-Techne has been limited near the Q3 report. CEO Kim Kelderman has not engaged in notable open market purchases to signal near-term conviction in the recovery timeline, consistent with executive behavior at a company managing through uncertain demand rather than executing against a clear near-term inflection point. Director ownership is meaningful and aligned with long-term value creation without near-term urgency.
The combined options and insider read is cautious neutral. Options correctly anticipated a modest negative post-earnings move. Insider behavior reflects long-term ownership alignment without near-term directional urgency. Bio-Techne remains a high-quality business in a difficult, cyclical environment. The investment thesis depends on biopharma cycle normalization timing rather than any near-term operational catalyst can control or signal.
Bio-Techne's Q3 showed the biopharma spending headwind persisting. Small misses on both revenue and adjusted EPS as demand for research reagents remains soft. 67% gross margins demonstrate the business quality is intact through the cycle trough.
Bottom line, quality compounder at a cyclical trough. Bull case is biopharma recovery driving sharp revenue rebound at preserved margins. Bear case is structural displacement and prolonged spending contraction. At $7.6 billion, the valuation offers fair entry for patient long-term investors.
Financial data and charts sourced from Financial Modeling Prep. Charged alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street swing.